Kick off. So thank you for everyone who has who's joined today. This is our second episode of Exchange with Lula, a webinar series we're doing every Wednesday at 11. And we're very much in the process of testing out what works for our customers, what are people interested in, and how we can add value. So today we're doing a bit of a different approach. Last week we spoke about the SME economy as a whole, and this week we're speaking about stock funding. And we have Thomas, who is going to take us through and give us some advice all about how to work out your ROI for your business growth. Thomas has been with the business for 5 years. He is currently the Chief Growth Officer. He was the Head of Product and then the Chief Operation Officer. So he understands the business and funding very intrinsically. And we are going to get some advice from him, and he's going to teach us a thing or two. So handing over to you, Thomas. Thanks for joining, and take it away.
Thanks, Lee. Hi, everybody. Thanks for joining. As Lee said, a very different session today from what we did last week, which was very broad and about the economy. This week, very much focused on a core use case for funding that we see. That's it. There is the budget speech later today, so I'm sure everybody's kind of holding on to hear what's actually going to happen. I'm sure in a future episode we'll cover off the impact of whatever tax increases we do see, whatever kind of investments we do see coming through. But let's kick off. So as we mentioned today, we're going to be talking about funding stock purchases. So what do we mean by that? I think a lot of people use different terminology. Every business owner has like slightly different terminology when they're talking about this. But when we say stock purchases, we mean stock, inventory, materials, finished goods for resale. So it's quite broad, but basically it's almost any time you're not running a service where you actually have to go and buy some inputs so that you can go and on-sell. And again, there's a lot of variation in what that looks like. But what we do know is about 25% of all of our customers are using Lula funding to make stock and inventory purchases, which is quite a big use case, as you can imagine. And then what kind of industries are the businesses that make use of our funding for stock purchases? So what you're seeing here is basically 4 stock purchases, the breakdown of industries that are where their primary use case is stock purchase. So again, you can see it's pretty broad. There's manufacturing, mostly on the consumer's goods side. In terms of just materials and inputs, you got the mines and the mining, restaurants, bars, so what you would think is service, but all those input factors, and so on and so forth. And again, you can see there's no like one completely dominant industry, very much a broad use case. And that's why 25% of our customers kind of cite this as their core funding reason or the core use of funds. What we do want to highlight here is effective management of that stock can make or break a business. We often see that stock or inventory, whatever you happen to call it, can be the largest expense for a business. And if it's not the largest, it's certainly the second largest after payroll, especially in the industries that we highlighted above. A poor financing choice. So if you don't have the cash on hand or enough of the cash or the cash flow to basically make these purchases up front, a poor financing decision can really hurt a business and put businesses under stress and strain. So the right strategy helps manage your business effectively and helps you scale your business. And so, often I think businesses would come to us and say, look, I've got this order, there's this promise of future revenue, it's a done deal, whatever the case, why can't you fund me and things like that. I think the nature of the cash flow that we see in businesses is paramount. You can't have these kind of lumpy one-off deals that you're going to get financing against. We need to see consistency, that sort of thing. I think it's very much the same for most funders. But let's talk about alternatives. So there are multiple ways of financing inventory purchases or stock purchases. I think the right one, and we'll unpack this in a little bit, really depends on your own business model, on your sales cycle, on your cash flow needs. And so if you're a low margin business, but incredible volumes, it might make one type of funding might make more sense to you than something else. If you're kind of you have a business with lumpy cash flow, but you've got big margins, so deals that are quite infrequent, but big payoffs or lumpy kind of revenue, then you probably need something a little bit different. I think it's really important to understand these things and be aware of these for your particular business. But just some of the headline things, kind of three broad ways to think about this. Short-term business loans, like kind of these lump sum funding. Lula, we've got our term advance product. There are other products out there where you get a certain amount of money paid to you, and you've got a very structured repayment cycle to that, and there's an end date in sight. And that's really great for, as it's described there, lump sum. You need for a particular deal, you want to move, you've got a big contract in or something like that, and you just want to augment your ability to purchase more stock or fulfill larger orders, then this is probably a good idea for you. Then there are lines of credit, sometimes called facilities and overdrafts and all those sorts of things, slightly more unstructured. And the idea here is to give you really consistent access to funds so that you've got a balance you can draw down on. But there's various flavors there as well. And then invoice financing, sorry for that bullet point missing. But this is not something that we do at Lula, but there are definitely options on the market where you could go and get the funding off of these sorts of deals that you do have. You can get paid in advance for work that for revenue that you believe that you're going to be bringing in. And then there's trade credit, right? Like this one's often the cheapest way, where you basically get your suppliers to give you a line of credit that allows you to purchase stock from them on credit. Like I said, there's a massive use of trade credit in the market. But that said, you're not always going to get the higher values or the larger values. You're going to need trading histories with whoever your suppliers are. And especially if they're international, then things get a lot more difficult. There are alternatives. There are things like buy now, pay later, or B2B buy now, pay later options in the market. We've got an alternative called Lula Pay, which is a pretty interesting product to dig into as well. So if you are considering funding inventory, what are a couple of things that you should think through? And when we're assessing funding applications, particularly for this use case, some of the stuff that we try to understand, in addition to kind of affordability, and again, affordability is one of our main criteria. Do you meet our eligibility criteria? And I'll talk through those briefly now towards the end of this prezo. And how much can you actually afford? So that's a key element for us. But some of the factors that we believe business owners or businesses should consider when trying to finance stock purchases. Demand forecasting. I mean, that might sound like, depends on the size and sophistication of your business. But basically, do you know how much you're likely to sell? Can you kind of, with some level of certainty, either, with some data, with some history, with some orders coming through, with some certainty predict how much you're going to need and by when you're going to need it. We'll talk about some of the pitfalls and some of the impacts of poor demand forecasting in a few slides down. The next one is super important. I think And this is one that's easy to overestimate, and we often see this particular one overestimated, your margin. Are you going to make enough that it's worth financing an inventory purchase or ongoing inventory purchase? There needs to be a decent return. Again, that return is very much dependent upon the nature of your business. But you need to understand what that return is going to look like. Otherwise, there can be trouble pretty soon. Other things to think through, so turnover rate and timing. How quickly are you moving stock? The lag between ordering it, getting it delivered, and ultimately making the sale can have a massive impact on the actual cost associated with it. We know our ports are some of the poorest performers in the world at the moment. We know transport and logistics is a real challenge in the country. And so factoring in those costs and thinking that through is super important. And then financing costs, having a very clear idea of your financing costs. Are they reasonable compared to your margin or your profit? I'll take you through very quickly a handy little calculator that we've got on our website to just kind of get a rough idea of cost of funding. And making sure that there are no hidden costs in the funding. Often you'd get like an interest rate, but there would be other fees like a facility fee, an ongoing monthly fee, penalties for late payments, that sort of thing. So I think it's very important to not factor in just an interest rate, but to look at the fees as a whole. And then the other side of it is your cash flow impact. Taking out funding creates another monthly cost. It might help you manage your cash flow, smooth that out a bit, but it is ultimately another cost in the business. And your ability to make those repayments is incredibly important for the future health of your business. So again, this one really speaks to affordability from our perspective, but the impact on your own cash flow, ability to do future deals, how quickly you can grow, how it impacts some of your other plans. So for us, if we'd say be able to answer yes, or have a strong idea of where you stand on each of these. If you're not super comfortable or you're uncertain on some of these factors, it's time to probably do a little bit more homework. These are also things that, if you haven't thought through, it's probably not going to come through in your cash flow and your affordability statements and all that sort of thing. Now, we're going to talk a little bit about ROI. And this is ultimately the main question you need to ask. What we've got here is just a very, very simple example for a single inventory or stock purchase decision. This is by no means a one-size-fits-all thing. This is your entry level, but it's more to discuss the thinking. More sophisticated businesses, folks that have been in business a lot longer, probably have models that they're working towards. If you've got multiple inventory purchases that you're making or ongoing purchases, this would be very different. And so the size and scale and nature of the business impacts this. But on a per decision basis, it pretty much stays the same. And basically, you need to understand, well, what am I going to earn out of this? What can I sell the goods for? Have I got a contract or a deal on the table already? Am I going to have to sell, per unit? Am I going to sell in bulk? What does that look like? Every business that's selling goods is going to have to understand what they can earn. And so understanding your expected revenue is super important. Understanding the cost of goods, very important. And this is not just how much is it costing you to order it or transport it. There are so many hidden costs that can creep up and catch you out. And so understanding these, unpacking them. So the cash flow costs involved in it, the time to get it to market, if you've got to warehouse it or insure it. There are many factors here and good to explore them in depth. And then your financing costs. as soon as you've got those three inputs and you're fairly confident that you understand what that looks like, it's fairly straightforward to understand whether a single purchase or financing a particular purchase is worth it. Obviously, ongoing, as we said, you probably need to be a little more sophisticated. Here's a really simple example, right, where you've got an expected revenue of about 800,000 Rand. You understand your cost of goods in terms of inventory cost, other input costs like transport, like insurance, etc. And then you've got a good idea of your financing costs. It's super easy at that point in time to calculate an ROI. It's super easy to determine what your margin would be. This doesn't factor in timing, so how quickly you can do this, how often you can do this. But the idea here is really just to say, go through this process for yourself and make sure that you're really on top of the decision. Which brings us to things to avoid and at least be aware of, right? So something that we do see, when do people come under pressure, or when do businesses come under pressure after financing inventory? Over ordering. So tying up your cash in slow moving stock, basically getting too much, having it on your shelves, sitting there being, really costing you in terms of the money you've already laid out, costing you to warehouse it monthly, costing you in terms of opportunity where you're not bringing revenue in. And slow sales cycles, like we've seen last week, we discussed, the impact of the economy. And essentially what we were seeing is that in the last year, the cost of funding has been quite high, or interest rates were high for a long time. And then it's almost a double whammy for business owners where inflation starts to drop and you're not increasing your price of stock at the same rate you were before, or you're having to discount it or write things off. And so essentially you've bought high and now you're selling low. That's a really bad place to be in. Definitely something we've seen in the past year impacting a lot of businesses. The flip side of this coin is under ordering, and maybe not as big an issue or as frequent, but definitely something that can be catastrophic to a business. So if you've got a big contract, I don't know, with a big retailer or something like that, and you're not able to fulfill your orders and you end up getting canceled because you can't keep up with the orders, that can be an incredibly bad situation to be in, where you've got a lot of redundant stock and you didn't realize any revenue, and you've maybe dropped the ball on a large long-term contract. Definitely something to watch out for and think through. Another one, I think it's just matching your financing needs to what your business needs. And so if you've got short-term loans for short-term needs, that's a good fit. Maybe it costs you a little bit more from a short-term perspective, because you're not smoothing cash flow out over years, you're doing it over months. That might seem like quite daunting and quite expensive. But ultimately, if you're able to match the timing of the need and the nature of the deal or the inventory purchase with your funding, it's generally going to be a good move. And so really think into it, think about it. Also consider the longer term costs. If you do go into a longer funding cycle, what does that do to your ROI? What does that do to your cash flow? How does that impact your growth? I think something that also comes through quite a lot is ignoring hidden costs. So storage, shipping, losses, insurance, having a clear view. Obviously, businesses that have been around longer have got good insight and a good grip on these things. The environment does change as well, so keeping abreast of what your supply chain looks like and where the risks are is pretty important. And then no backup plan. So it's I think entrepreneurs are optimistic by nature. At least you have to be. You have to believe that things are going to work and you're going to do well. at the same time, being realistic and having a backup plan. What happens if sales are slower than expected, as we've seen over this last year? So, this speaks to kind of matching your terms as well. Maybe if you've taken out shorter term funding and you absolutely have no other option, you could kind of extend those terms out, speak to your funder, for instance, understand what your options are, think through how you could consolidate into a maybe a single facility or something like that with better costs or easier to manage fees. But I think get out there, ask questions, whoever's funding you, really speak to them and understand what your options are. So in summary, I think funding your stock purchases, funding inventory purchases or materials, it is a very powerful way to grow your business, to maximize returns, maximize growth more than returns, I guess. But I think evaluating your financing options carefully are super important. Doing that ROI assessment, whether it's pretty basic or it's something far more sophisticated and suited to your business. And then, understanding Lula's products. We don't do advice. We don't do advice, but we can talk through the benefits of our product and unpack that for anyone that's interested. A couple of resources just to think through and maybe visit if you don't want to find out more. So bookmark the lula.co.za website. It's pretty simple to apply for funding or open a bank account. We do break down our different product types. So our capital facility, our kind of term advance, capital advance, which is a lot more structured. There's a really nice guide here on how it all works and the process involved. There's clear eligibility criteria. So we're not a startup funder. We're very much revenue generating business. We're here to address the missing middle businesses, generally registered businesses that have been around for a year or longer, that are revenue generating. We have an annual minimum revenue requirement of 500,000 Rand. Pretty easy to translate that into a monthly, so 40,000 Rand a month. And we fund South African businesses. That doesn't mean foreign nationals can't, be a business owner in South Africa, for instance, or access our products, but very much a South African business requirement. And then something that's very useful to look at is our calculator. This is a kind of a generic funding calculator. That's not to say this is the pricing that you would get. But if you had to go ahead and kind of calculate your funding needs. So our example, we had a 600,000 Rand cost. You could go ahead and see, okay, well, what is my total repayment on that going to look like? You could see it over a few different terms and see what that repayment would look like. And then I think importantly, understanding the impact on cash flow. So taking out funding over a shorter term would obviously come at a higher cost. Lula's pricing is it's a single flat fee. There are no hidden costs. And so it does maybe look a little bit bigger up front. And we also generally collect a little bit more in the first third of a funding contract than the next 2/3. And so understand how much is due at the end of each month. If you look at that same kind of funding amount upfront, there's you take it over a longer term and it can be a little more expensive, but ultimately it would be cheaper over the longer term in terms of smoothing out, so that monthly repayment can come down quite dramatically in terms of smoothing out your cash flow over the longer term of the contract. So, you got to weigh it up. Is cost the biggest driver for you? Is it that smoothing out your cash flow that's a big driver? Important things to think through. And so in that ROI calc, this is something that could probably help you a little bit. But this is based on the average score and credit history. But your quote, we do personalized quotes. Your repayment plan would be very much dependent on your business and the profile of your business. So with that said, let me stop there for a little while. We'll do a demo shortly of our platform. I don't know if there are any questions or queries anybody wants to ask.
You don't want to unmute yourself, you're welcome to post a question in the chat and I'll announce it. So if you guys need to think about it a bit longer. Oh, do we have a hand? No. If you have a question, post it in the chat and we'll get to it at the end.
Easy crowd this week.
Yeah.
Cool. So what we're going to jump into is a little bit of a demonstration of our platform. And we're going to take the risk, take the plunge, and do a live demonstration. So this is our production platform. Bookmark this page if you're an existing funding customer or banking customer. Make sure you've bookmarked the secure.lula.co.za page so that you can log in and you don't have to Google us every time you want to do a funding withdrawal, for instance. So as soon as you log into the platform, you're presented with all the products that you have with us. So we have our banking products. It's not mandatory to have a bank account along with funding, but these products do work quite well together. And so what's great about Lula and our new banking platform, you can have multiple accounts. So it's incredibly easy to add more than one bank account. You can do that simply by selecting account, the account type that you want, and giving it a name. And you've got another bank account, which is something that takes a lot of PT to do with other institutions. The other thing that you can do, it's through these multiple bank accounts, it's easy to transfer money between your accounts, and it's instant. You can manage various cards. I'll go to a screen where we do have cards. Pretty important with the Lula account. We're partnered with Access Bank, so we don't have our own banking license, but we are able to offer all the services of a bank. So in terms of transaction types, we do offer electronic fund transfers, real-time payments, high-value transactions, 5 million and above in South Africa. We've got a fully functional MasterCard, which allows you to do both domestic and international transactions at a point of sale or online through e-commerce. But pretty important to note that the bank account name will be Access Bank, but it's incredibly easy to copy these details, share it with your customers, or load it onto your own banking platform. And another great tool here is you can download a bank confirmation letter at any point in time for today's date and share that if you've got, for instance, suppliers or perhaps a tender or something that you're looking to submit an RFP and you need a bank confirmation letter. From there, you can also easily manage your bank account. You can get statements all the way for the entire history of your account. It's absolutely free. You can also get these statements via CSV. So if you're downloading them and then uploading into your accounting package, that's a use case that we see quite often. Beyond that, we do have a payments platform that allows you to very easily do standard payments. So you can do one-off ad hoc payments as you could with any other bank. You can add your beneficiaries and manage your beneficiaries. You can see a full history and download or a proof of payments, that sort of thing, very easily. And then we also provide a scheduled and recurring payments platform. In the near future, we'll be launching what we're calling our Park and Pay, or a name to be disclosed pretty soon, which will allow you to have multiple users of the bank account with a load and release business banking option. So something to watch out for. Now, talking about the funding product. So today's webinar has very much been focused on a funding use case in terms of inventory purchases. Once you are a Lula customer, so I'm not going through the app process now, but the app process is pretty straightforward, easy to do online. We need a bunch of details from you, and we need at least 3 months bank statements in order to assess affordability. Once you have an app for us and you are approved, you can view your products and manage them 100% online, or you can speak to your sales consultant or your account manager. But this is what you would be able to see at any point in time. So you could see for our facility product, you can see an available balance. You can link accounts that we do ongoing assessments of your affordability against. You can request a withdrawal, which is pretty simple, where you can provide an amount that you want to withdraw. You can request a credit limit increase, all very easy to do in the app. Super handy if you want to understand your current position and where you are. We've got this nice little repayment summary, which will tell you your full capital owed. It'll give you some idea of your term and your installments, and when your next payment is, and a really handy account status. To get more detailed view, we do have a full breakdown of a repayment plan. We'll very clearly show you the cost of capital or the capital amount that you're repaying in each month and the cost. And you can download a full PDF statement that will give you all the details on your account. Beyond that, we've got our lump sum or our structured product. This is a lot more structured, as the name suggests, where you could have a 3, 6, 9, or 12-month repayment. It's for a one-off amount that's completely deposited into your account versus doing withdrawals against it. So quite a straightforward, easy way to manage your funding needs. I think very important, we don't charge, so there's no collateral required. There are no hidden fees, and there are no early repayment penalties. So one of the great benefits of the Lula product is that you only pay for the capital up until the day you've literally used it, which can be a great way to kind of manage your cash flow, boost your return on income if you're managing your cash flow effectively and able to kind of settle your funding as you need it. So with that, I'll hand over to Lee for any questions or queries, and thank everybody for listening today.
Awesome. Thank you, Thomas. Thank you for that detailed, in-depth overview. I think it's very helpful to see it and also understand it from your perspective, things to watch out for, things that are helpful, things to think through. It's very useful, I think, to everyone. Yes, we have a question from Sean. He's asking to upload the monthly bank statements. Do you have a link for doing this easily?
Hey, Sean. So we've probably got a couple of people on this call that could answer that much better than me. But the short answer is yes. When you're going through the application process, you'll basically submit all your details. So we ask you a bunch of personal information. We ask some business information. And as soon as you submit an application to say, hey, this is how much funding I'm looking for, and this is what I want to use it for, we then provide you the ability on the site to either upload PDF bank statements or link your Lula bank account if you've got a Lula bank account. And very soon in the near future, we'll be adding an account aggregation feature where you'll be able to link your FNB, Standard Bank, basically most of the big bank, and that would keep that as an ongoing link, especially for a product like our capital facility, so that you can keep that affordability and that credit limit active. Is that enough of an answer, or is there something more that you'd like us to unpack? Cool. We can come back to it if you've got a follow-up question. What I would say, we've got a really handy help center with a ton of FAQs. I'll bring that up now because I don't have it open. I'll browse to it. And then James, if you bank with Lula, can the cash flow tool give me some insights into suggested loan duration, repayment periods based on my transaction history? So look, we do that through a quote. And so it's hard to forecast future revenue, which we try to do with cash flow insights. What we do is alert against liquidity risk. So if we see that your bank balance is going to drop below kind of the 0 point or some point that you actually want to set, then it can flag that for you and say, look, transfer some money into your account or consider funding. But we don't have like an automated suggestion on how to repay or what the structure of that should look like. We do that only after a full assessment. Matt, does Lula prefer an early settlement to motivate a credit limit increase? So no, I think the early settlement is not going to drive credit limit increases. I think it's more a benefit to our customers. I mean, to be honest, I'll be completely honest. As a a funder, we earn more money the longer you take to repay us. That's just the nature of the deal. You can see that in the calculator if you play it out. But we, as a fintech, we do want to be kind of more transparent and really make it easy for businesses to succeed and to grow. And so that early settlement is really up to the customer. And to be honest, it's not something that we see that frequently. It does happen for sure. But it's more the guys that are kind of really managing their facility on a monthly or a quarterly basis, where they're kind of putting money in and out quite quickly.
There's also a second part to that question. Can one get a credit limit increase before settlement of the full facility? Matt's asking.
Yeah, absolutely. This is going to be determined by a few different things. So very much your affordability. So affordability is the biggest driver here. Economic conditions, we do have to factor in kind of the macro economy side of things as well. But affordability is the biggest driver of increasing that facility amount. If you can't afford it, or we don't believe you can afford it, then we're not going to approve it. Just like kind of 100% honestly, and open cards as well, we do assess every single withdrawal against the facility. So you may even find that we might have to drop the value there, and that does annoy customers sometimes. But I think it all speaks to that affordability. We can't fund where somebody can't afford the funding. Sean, this is to keep it updated after the account has been opened. I think that if I had to guess, that would be in reference to linking your bank account to something like the aggregator Yodlee. Yes, this is to keep that limit refreshed, so that if you actually do link a bank account through the aggregator versus uploading statements, we can keep your balance active and up to date for you, so that you don't have to be assessed for affordability at the point of submitting. And then it basically makes it a smoother, easier process.
Awesome. Thank you so much for all the questions, everyone. If anyone else has another question, You're welcome to ask it now, or you're welcome to reply to an email we'll send you at the end of this webinar. We're going to send the recording, so you're welcome to share that with anyone that you think would be interested in it. And you also can just reply straight back to that email with any other questions that you think of during the week. We are going to be running another webinar next week, Wednesday at 11 o'clock, as we will for pretty much every Wednesday going forward. We are going to be talking about stock again with a different angle. We're hoping to get a customer to speak on the webinar and just to share how they have used funding to grow their business. So a bit of a customer story is what we're hoping for next week. So please tune in. We will send you a feedback link and the recording straight to your inbox. So thank you so much for joining, everyone, and we hope to see you next week.